I think quite clearly as an investor, our experience with COVID and what's happened really for the first half of this year basically has varied in terms of where those investments are. So while we've seen a lot of gains, both from a value point of view and an operational point of view in our technology and communications related exposures, we also are exposed due to our strategic presence in aviation and in travel and tourism to sectors which have been particularly badly hit. So that I think is a reflection, I think, of the reality of the economy today. And what you're going to see basically is both growth and recovery being, I think, out of step depending on which sector you're in.
The first quarter was quite challenging, of course, for EPF. We've just released our first quarter results, and of course we took quite a hit in terms of our from the assets of the equity side. But I think the one advantage of being an EPF is because we are a long-term fund, right? So rather than look at the COVID like the enemy who's out there, like the Klingon out there to take over civilization, we can also look at it in terms from an opportunistic perspective. Because especially in mid-March, when the equities, nearly everywhere, equities just went down, which was actually a great timing for us to actually start going in to also pick up fundamentally strong stocks, right? So again, as I mentioned, EPF being a long-term fund and the COVID being what I would call it the great revealer, because it really actually showed the type of assets, the type of companies and the type of businesses that will not last in the long term. We take it very positively. Because in every crisis there's always opportunity, and I think we've managed to go and pick up the nice stocks which we actually serve our members very well.
Like other institutional investors, it has been a tough for the first half of 2020. As you recall, with a low of 1,207 on 19th of March, just after the PKP, to a high of 1,590 somewhere on the 9th of June. But like KPF, we are also a long-term investor. In order to understand this, we must understand the nature of a liability of a pension fund. One is they are long term. For example, currently we have about 2/3 of our members are still working and not drawing pension. Another 1/3 is drawing the current pension. Another nature of our liability is inflation linked kind of liability. It's long term and inflation linked, and the last one is part of our liability is actually almost 100% of our liability is in ringgit Malaysia. With that, we remain focused to invest in the domestic market. Even if we go overseas, it's purely for the benefit of diversification to achieve an optimum risk matrix, risk return, reward.